completely a moving target, and there's new information and stuff that comes out on a daily basis. And to be honest, forbearance for anybody depends on what kind of loan they have and who their servicer is. And to be honest, a lot of the servicers don't know what's going on. I just read an article today that some customers are getting the wrong information from the servicer in terms of the forbearance. But then Fannie Mae just came out and they said that anybody that files for a forbearance, that the total payment would not be due at the end of the forbearance period. So the real point of this is just to give you a couple of tools to search through, maybe provide them to your clients, use it as a tool to reach out to clients, to sellers. Like I said, there's new information coming out all the time related to it. I'm going to share my screen really quick. Let me get out of this here. I'm going to share my screen just to show you guys a couple of sources that can give you information related to forbearance. So forbearance is not forgiveness. That's the first thing. There are a couple of ways that the forbearance can go down. The first thing is that whoever's applying for it needs to actually call their servicer and request for the forbearance. It's not going to happen automatically. And if they just choose not to pay their payment, they will go into default. So that's the first thing. Once they call their servicer, depending on who the servicer is and what type of loan they have, that servicer is going to tell them what the forbearance options are. Right now, the standard is 180 days, and that means that your payment gets delayed for 180 days. The servicers are supposed to contact the person 30 days prior to the forbearance period coming due to see if they either want to extend it another 180 days, or B, if they want to work out a payment plan so that whatever the back amount due gets spread out over the course of, could be 12, 18 months, whatever. They work out a payment plan to add that on, or they're looking at doing loan modifications. In every circumstance, there's a process to it. And so it's not going to be automatic. The crazy part about all of this is that up until this point, forbearance in general has been really, really, really loose. Servicers are not asking for proof of hardship, which obviously puts servicers and lenders and stuff in a pickle, because literally anybody can call up and apply for request for forbearance. So that's the first thing. So it can look like a couple of different ways. But again, Fannie Mae announced today that they're not going to make the back due payments due in one lump sum. So that's just for Fannie Mae. Those are only loans Fannie Mae or Freddie Mac. If you're talking about somebody that's got a jumbo loan, for instance, those are not Fannie and Freddie loans. So that wouldn't apply. Somebody that's got a jumbo loan, if it's US Bank, if it's Bank of America, if it's Wells Fargo, if it's whoever it is and it's a jumbo loan, the forbearance circumstances and the forbearance conditions can absolutely be different. The other piece of it is that, how is this going to look at the other end of this in terms of credit and in terms of obtaining financing afterward? So there's been a bunch of stuff and a bunch of releases saying that lenders and servicers are not going to report late payments on credit. That is not to say that it wouldn't impact somebody obtaining financing down the road. So let's just say hypothetically, you have a seller and they go into forbearance, they don't make their payments for the next 4 months, they decide they want to sell their property, they sell it, and then a year from now they decide they want to buy another property. There is nothing out there right now that says that the forbearance is not going to impact their ability to get another loan. From a lending perspective, just because it's not on credit does not mean that as a lender or a bank or whoever is granting that loan, that they're not going to look at that as a risk factor. Obviously, you know, COVID-19 is a special circumstance and so forth. But when you're talking about loaning somebody $1 million or $700,000 or even $300,000, if they didn't make past payments before, I believe that is absolutely play. So their credit score still may be 800, but if somebody applies, let's just say in the scenario, your seller sells their property and in a year from now, they want to buy another property. When we pull their credit and we see that they had a previous loan, their credit score may be 800, but we're going to ask for additional information about whether they did a forbearance, whether they got a loan modification, all of it, because there is an additional risk factor involved in terms of lending. Another piece that I've heard, and I haven't confirmed it 100%, I was told that anytime somebody calls to inquire about a forbearance, and this is I believe it's more specific to jumbo loans, but again, I'm not 100%. Anytime somebody calls to inquire whether they apply for it or not, their account is flagged for possible future non-payment. So, and it's, you know, it's not to say that's obviously not going to reflect on credit, but Joey, you're on mute. Were you going to say something? Oh, okay.
No, I'm double tasking. I'm sorry. I have listening to you in the ear and trying to do something else in the other.
So long story short, there's a lot of—
That sucks, by the way.
It does suck. And again, it's not 100% confirmed. I've heard that. The moral of the story is whether you're talking about a potential seller down the road, these are really important things to touch on. The fact that if they go into forbearance now, it may impact their ability to buy down the road. And I don't know if we're talking 12 months, if we're talking 24 months. All of this is certainly fluid. And we won't know until we really get there and we see the impact of all of these non-payments. At this point, I think I mentioned on the weekly team meeting, at this point, there were 3.5 million mortgages that went into forbearance. That was as of April 19th. That number is likely double or more than that. So I'm going to share this. I'm going to share my screen here with a couple of different websites for you. Let's see where I'm at. I have never done this, so bear with me. I don't know how you do this here. No. Let's see here. I'm trying to share my— no. Hold on, let me figure this out. Sorry about that. I'm getting there. Okay. Okay. So this is a website called forbearancereport.com. Anybody can access it. It's not private. You don't need to have a membership or anything to go here. This is a guy that's been in the mortgage business for a long time, and he put together this website for informational purposes. If you go through to the bottom, you've got a list of loan servicers here. And if you click on any one of them, let's look at, Flagstar Bank. So if you go Flagstar Bank, it's got a very basic read on what the forbearance policy is for that bank or servicer. This could be a really good tool for you, again, to reach out to your sellers or to potential buyers that have family that own houses that are affected, in terms of employment and things like that. This is a really good resource to get just some basic understanding of what each individual servicer and bank's policy on forbearance might be. I wouldn't put 100% stock in it, but it's a good tool. It's a good resource. His little video, it's short and sweet, and anyway, he just explains what forbearance is. The next thing is, does everybody have Housing Wire? Does anybody use Housing Wire? This is another really good source for up-to-date information in terms of lending, in terms of forbearance, in terms of guidelines. Calabria is head of the Federal Housing Financing Agency. He's basically, he's the guy in charge of all of this, and you know, whether you agree with his approach or not, he's the guy in charge. Anyway, Housing Wire has a really good section on mortgages. There's articles every single day on, oops, let me get to this next one here. Some services are providing wrong information about forbearance. This could be a good tool for you to also send articles to clients. You know, you're certainly not responsible for being any sort of expert, but these are really, really good articles. You know, I could certainly post them all day, every day, but there's so much information and it's so fluid. It's a good tool. And then you've got, let's see here. Here's another one. So you've got the jobless claims. It's up to 30 million people. The jobless claims came out. That report comes out every Thursday. It obviously impacts interest rates and things like that. It's also impacting forbearance and so forth. Another tool, if everybody's on Facebook, this site used to be private, and they used to only let in people that held memberships. I've played his videos before in the team meetings and so forth. Barry Habib, he's really valuable in terms of mortgage information. This is now an open site, and he hosts live Facebook events and stuff all the time. And he's got leading economists, housing experts, real estate experts, loan experts, you name it. It's on a daily basis. There's some sort of event and live feed or article or whatever. And this, again, used to be private. So I suggest following it because it's a good tool. And that's really it. I think more than anything, it's just about having the resources, because again, everything is changing on a daily basis. Guidelines on loans are changing on a daily basis. Requirements on loans are changing on a daily basis. I just heard today that Fannie Mae is potentially getting rid of all cash out refinance loans. So in terms of forbearance, there's no cut and dry answer. There's no standard policy related to it. So I highly suggest just providing as much information as you can to your clients. Again, we don't know what it's going to look like on the other end in terms of credit, or in terms of how they're going to be able to obtain loans later. So I would just say, you know, when you're advising people, advise them, you know, with caution, because we don't know what it's going to look like on the other end. Does anybody have any questions? No questions? All right. That's really all I've got, you guys. It's again, forbearance, this whole situation is not it's obviously, it's not an opportunity for opportunists. And it's not forgiveness, whether the amount is spread out at the end of it, or whether it's tacked on to the end of the loan, whatever the terms are, the money's still owed. I mean, it's sort of like the rent moratorium, right? I think there's a lot of renters out there that might think that they just aren't obligated to pay the rent. And that's not true either. So anyway, I'm always here for questions. I know it's vague. I just wanted to give you guys a couple of tools that you could check out, you could research, you could use. And that's really it. There's Joey. Any questions, anyone?
Thank you, Andy.
Yeah. What's that, Rob?
Do you think this is something that, you know, we're talking about now, but we're not going to actually see until maybe a couple months from now? Like, I had a seller, or I had somebody, I sold him his condo. I mentioned this morning. I sold him his condo last January, and he's been in lockdown, and now he's beginning to get really unsettled. So, you know, right now he wouldn't be thinking about forbearance, but he might in a month or two. Mm-hmm. Do you think that we're going to see a wave coming a little bit later?
I mean, it's possible. Never say never. I mean, I think even after things open up, I think that there's the effects are going to be longstanding, and certainly there's going to be a transition period. That was another piece. I'm glad you brought this up, because there's still people buying, and there's also people refinancing. Has everybody heard of first payment default? Does everybody know what that means? So when we close a loan, whether it's a purchase or whether it's a refi, that we close a loan. Like, for instance, I close a loan today. The person's first payment isn't due until June 1st. You skip a payment because mortgage interest is collected in arrears. So you close today, your first payment is in June. If somebody purchases today or refinances today and closes and does not make that first payment, that's considered a first payment default, and you can absolutely get foreclosed on for it. Mm-hmm. The other piece is that when somebody does a first payment default, automatically that makes it a totally unsellable loan. That means that us, Movement Mortgage, cannot sell it off for servicing or anything. You literally take a massive loss on it. The other piece to consider too, and there hasn't been any sort of clear guidance on this piece of it either, for somebody that is coming due for their first payment, how the forbearance process looks or works for somebody in that case. Not making your first payment is not a good idea at all under any circumstance. Then there begs the question of, should the loan have been done in the first place? Was there fraud involved? All kinds of things. So first payment default's not good. Is there going to be a second wave? I'm sure. I don't think that the forbearance rates are going to just stop once the economy opens up.
Now, what do you think about, when we went through this in 2008 and 2009, and there were so many foreclosures, we ended up having, toxic properties where the banks, you remember the situation. Now, if there's defaults, these properties are worth something because we are in really a seller's market and there's a lot of demand. Do you think we're going to start to see a lot of REOs coming up towards the end of the year?
I don't know about that. And the reason is partially because these guidelines and the guidance for forbearance has been so loose that the objective is to make sure that people stay on their properties, that
right.
Make sure people aren't losing their homes to foreclosure and so forth. And they've made these guidelines and the guidance on this forbearance issue so loose that I don't think so. And like you're saying, if the average person has 30, 40, 50% equity in their property, you're gonna either sell it before it forecloses, or you're gonna figure out, you know, a loan modification or whatever the case is.
Okay.
Your credit is gonna suffer, you know, on the latter piece of it. But I don't think so. Maybe on the deals where people put less down and where buyers had less skin in the game. You know, somebody that was doing an FHA loan with 3.5% down, or, you know, 5% down, and they lost their job and really didn't have any savings above and beyond that down payment and the closing costs. We might see some foreclosures, maybe, or short sales.
Okay.
I don't know about a massive wave. I think price point and all of it matter. You know, the more somebody's got into a property, that's an entirely different narrative than somebody that did virtually, you know, no money down or low down payment. So, anybody else?
So if the clients do decide to do the forbearance, they have to structure what the repayment's going to be directly with their lender. That's what you're saying, right?
Yeah. And every bank is, and servicer is going to be a little bit different. In terms of how they structured. If they're going to do an entire loan mod, where maybe they tack on the balance of the past due payments onto the back end, and then they modify the loan and the interest rate and so forth so that it's more affordable. Every bank and lender is going to be different, totally different. That's the hard part about this, is that in terms of the guidance, it's so loose that it's just sort of a free-for-all in terms of what each servicer is doing and what the requirements are and things like that. So.
Okay. So it's not the worst, or, I mean, it's not the worst that the client actually does it though, right? Just depends.
My only piece of advice is certainly there's people that need to do it, and it's necessary because they legitimately just, there's nothing in the bank and they can't make the payment. If somebody has the ability to make their mortgage payment, I would encourage them to do so, because again, we don't know what it's going to look like on the other end of it.
Yeah.
There is no distinct or clear information on what that's going to look like on the other end of it. And to skip a payment and then maybe they catch up in a month or 2 months or whatever to skip a payment, and then really shoot yourself in the foot in the long term if you decide to sell the property, or if you decide you need to refinance the property. You know, lending in general is constantly changing. You know, this isn't to say that several years down the road that things don't open up and so on and so forth. At this point though, programs are getting restricted, and there's going to be a healing process after all of this, and after the sheer loss of the missed mortgage payments and stuff is realized. So if somebody can make their payments, I would encourage them to do so. And certainly touch base with your recent buyers too, and just see how they're faring. And first payment defaults are the worst. So.
Yeah. I told my client, she has the money, but she's like, oh, you know, I don't have to pay. So I told her, no, you have to pay.
Yeah. At some point she'll pay.
Well, we all have to pay, Andy, apparently.
It's not free money, unfortunately, you know?
Yeah.
And the reality is if you break down the number, right? If you're talking about let's call it a $3,000 a month mortgage payment, what are you benefiting by keeping that $3,000 in the bank? Like a couple bucks? What are you benefiting? You could potentially be affecting your ability to buy down the road. To just keep the payment in the bank. If somebody has the ability and they have the money to pay it, absolutely pay it.
Got it.
For sure. For sure. So that's all I've got, you guys. Again, guidelines are changing all the time. I'll certainly keep you guys up to date, up to speed.
Well, this stuff really helps because I send the stuff out to actually my database all the time, and I get a lot of people responding back and just thanking me, you know, for the information. So this really does help.
Good, good. And, you know, check these out. I don't know, like I said, I don't know who has Housing Wire, who looks at it or whatever. Check out this forbearance report. Also strongly suggest following MBS Highway on Facebook. They've got some good information, good events, and just arm yourself with the information. I'm always happy to be a resource too. If you have clients that need to talk through the lending piece of it, whether they want to refinance or not, it doesn't matter to me. I'm happy to help and advise them the best that I can. So. All right, you guys. It's good to see everybody. I'm going to send out.
Thank you, Andy.
Yeah.
Thank you, Andy.
I'm going to send out my appraisal class. We'll do that on, I think, the 13th. And I'll see you guys at the weekly meeting too. All right. Bye, you guys.